thanks so much for joining again. I would like to use this video to introduce intangible assets. What are intangible assets? Intangible assets are assets that lack physical substance. So here we're not talking about property, we're not talking about machines, we are not talking about equipment. We talk about items such as exclusive rights, patents, copyrights, trademarks, and so on. Under IFRS, there are some rules when an asset is referred to as intangible. First, the intangible asset must meet 3 criteria. The first one is it must be identifiable. So it needs to be able to be separated from the entity, or it needs to be arising from contractual or legal rights. So it's clearly identifiable. If we have a patent, it's one patent. I can buy or sell the patent. Second, it needs to be under the control of the company. Otherwise, you're not the owner. And number 3, it is expected to generate future economic benefits. So it needs to have a type of value. There are 2 additional recognition criteria. The first one is it is probable that the expected future economic benefits of the asset will flow to the company. So you not only own the intangible asset, but also the value it brings belongs to you and not to someone else. And the last one is the cost of the intangible asset can be reliably measured. Under IFRS, goodwill, you may have heard about goodwill, is not considered an identifiable intangible assets. As you know, goodwill arises when one company buys another company and the acquisition price exceeds the fair value of the net identifiable assets. Here, goodwill is not separated from the entity. You can't really identify the intangible asset because you look at the company as a whole, and if you have paid more than the net identifiable assets, then you need to record goodwill. Under US GAAP, the definition is a bit different. There, goodwill would be included as an intangible asset. It doesn't really matter, but for you to think about intangible asset has to fulfill a few criteria. So whenever you come across an intangible asset, you want to be sure, think about those 3 criteria plus the 2 additional ones. How can we classify intangible assets? So the first classification or categorization, and I don't go into too much detail, is thinking about where did you acquire the asset. And it has an implication on whether you capitalize, whether you expense, how it's recognized on your financial statements, whether balance sheet, income statement, and cash flow statements. So, and there are 3 criteria, not criteria, but 3 different categories. The first one is if the intangible asset is purchased in situations other than business combinations. Business combinations is M&A, when you buy a company. So here, think about a patent or a trademark that you just bought from another company. Then you purchased the asset, but not via buying the entire company. So this is number 1. Think about all intangible assets, certain rights, trademarks, franchises, and so on. When you buy them separately, then they belong to category number 1, and it has an implication on financial statements and how you record those. Second one is maybe those intangible assets have been developed internally, software, intellectual property, and so on. Usually you would look at R&D, research and development. There are certain criteria how you need to record some of the early work during the research phase, and then when it comes to development phase and whether the asset or the product, so to say, has reached feasibility. There are a few criteria. And then the last one, number 3, is whether the intangible asset has been acquired in a business combination. Means you have bought another company. The company you bought comes with a lot of patents, copyrights, trademarks, and so on. How do you deal with those intellectual property when you acquire another company? So you don't directly purchase the intangible asset. You have obtained the right to those assets via M&A. Yeah, so this is one categorization. This is really based on, okay, how to record the asset. Then another way is, and it's a bit different, it's when we look at how do we deal with the asset once we own it. And here we talk about amortization and impairment. As you know, here we are not talking about depreciation, because depreciation is only for tangible assets and amortization is for intangible assets. So here, once you own the asset, a few things need to happen. And again, there are rules and regulations how to account for those. In general, think about whether the intangible asset is held for use, that you as a company use it. Once you have decided, okay, this is an asset like a patent, a copyright that you are owning because you use it, then you have a sub-classification on whether the asset is held for a few years, whether it has a finite life or whether it has an indefinite life. If it has a finite life, it will be amortized over the useful life and impaired from time to time, whether there is a reason that the asset that it may lead to an impairment. So you don't need to test annually, and it is similar to what I have introduced already with property, plant and equipment. So the amortization and impairment process is similar if you talk about intangible assets with a finite life. If the asset has an indefinite life and you can use it forever, then the asset is not amortized, but it is tested annually for impairment. Yeah. Then completely different categories, and this category B overrides everything before. So once you decide, okay, we don't need the asset anymore, we would like to sell the asset, then you reclassify the asset as asset held for sale, and then you no longer amortize or depreciate anymore. I'm including depreciation because category B also applies for tangible assets. And at the time of reclassification, you would test the asset for impairment. Yeah, basically think about you no longer use the asset and you make it ready for sale. And to identify the right price, you do reclassification and you test for impairment. Yeah. So quick introduction. I hope you found this useful. Thanks so much for joining. Talk to you later. Bye.